Alright, what's up you guys? This is Janos with Trading Spies, and wow, what a day is the choppiness, the false breakouts, it just keep continue. If you guys remember, for the yesterday episode, I told you guys if we're gonna be below the low of the day when the FOMC minute happened, if we manage to break that level, from that level it's gonna be a very easy down to the 432, possibly the 430 level, right? Oh boy, I was wrong. And that what is just shows how difficult it is to trade for the today's environment, because usually exactly that's what happened. Whenever we have either way, even if we go up or we go down very fast on a low volume, usually once we reach that level, it's very quickly goes back where it came from. Today, it just didn't happen, and the choppiness, the false breakouts is throughout the whole day. All that being said, we still managed to make our daily goal. We still managed to trade 5 times, 5 winners, and all the winners less than 10%. So very difficult day. And let's get in. Let me show you guys how I traded, what did I see. And as always, if you guys like this channel, like the content, and you find value in it, please don't forget to hit the like button, subscribe, and turn your notification on. And let's get in. Let's get started. So let's get started a recap here. Today we had a nice size gap down. We can say about over 3 points gap down, right? We closed up here yesterday 436 level. We opened 433 level, so it's a little bit over 3 points gap down, which is you know, it's a nice size gap down. And if you guys recall, on yesterday episode, what I said, if we're gonna be able to break down this level, right, the level of the FOMC minute low, then most likely we're gonna head down for the 432, possibly the 430-ish level. Unfortunately, it didn't happen. And let's just go back for the 1 minute. So the first exit, actually my first entry, basically was on the exact theory. Let's go right here. We already broke down, right? So basically we retested my first entry or pivot low, and then as we opened, basically the first candle give what it made a new low, I entered into that specific candle. But as we were going down, we quickly reached these the level low of the candle, and we started to chop around at least half a minute, right? So it just seemed we hitting a wall, and as the new candle opened green, I was out. So it was a hesitation. I didn't want to be in it, so I exited. And then basically that candle gave me a little bit over 10.25%, 10.44 to be exact. And then from there, we just headed higher, right? The white line is the previous day close, so that's the yesterday close. And then throughout the whole morning, these 4 candles was the cleanest candle, right? nice green candle, we closed, we continue, and that's it. Breakout. This was the cleanest throughout the whole morning, because what's coming after is just choppiness. Red, green, red, green, red, green. Wicks on top, wicks on bottom, and the candles basically same sizes covering each other. It's very, very difficult to trade. My next entry came basically in an idea as we basically pierced through the yesterday low. We rejected that level right away, and as soon as the new candle made the new low based on the rejection candle, I entered into that move, and unfortunately it didn't work out, because right away a huge engulfing candle, half a volume size as the candle what came down, and we just started to go higher. And in this case I made a mistake. I didn't follow my plan, which is I should have exited right as we broke our previous high. I'm not using stops, any set stops. Basically I use mental stops 99% of the time, and because of the choppiness, basically what happened is, and these ruined basically this whole trade, right? The whole psyche of the trade. As we went higher, we wicked higher, but in the exact moment, as you can't even react to it, that candle, as we can see, rejected our next level, and it came right back down. And then basically that's make you think, okay, even if we're going higher, it's a lot of rejections, right? So I stayed in the trade. I wait for the choppiness basically to continue, and as we broke out of that level, basically I added to my trade. In this case I was hoping right? It's not a good word when you say hoping on the trade while you're in the trade. We will continue down and I will be able to scale into the trade, right? So I entered, which at that moment seemed a very nice entry, because the moment I entered it wicked down and we started to head lower, and basically we found a very, very nice support with the yesterday low. But these half an hour, it became a chop fest. 2 candles down, 2 candles up, 2 candles down, 2 candles up, 3 candles down, 3 candles up. So it just became craziness. And then because of the choppiness and the time what we spend on the same level, the time decay basically is erasing the contract, right? Not erasing, but significantly make the contract value lower. So these arrows and the numbers, I put it here for you guys, because at the same level, half an hour later, yeah, exactly half an hour later, the contract prices worth 20% less as we entered first. Over here I didn't enter, I just put these arrow for you guys to see how much is the time decay affected this contract. But as we shoot out, let's go back a little bit. At this point already, I made my mind, once we get above my level, my next level, and close above that level, that's gonna be my exit. So either I gonna lose big, or we got lucky, because sometimes we just need luck, and then we're gonna be able to do something, manage this trade somehow. So basically what happened, as we went higher, I added one more time, and unfortunately, if you guys recall my episodes, these are already not scaling in, as a lot of YouTubers would say you're scaling in. This is already averaging down. It just happened, the trade turned to my favor, but this is a very, very bad concept for you guys to see how to trade. But I have to show you guys the good and the bads, right? Because that's how we can learn out of it, right? So basically I added one more time to my trade. I averaged down the second time, which I never recommend. And if these entry would have turned against me, then basically we have a very, very quick, already established exit, right? So in this case, my second ad turned out to be the one, and the trade started to work towards my favor, right? We break down our previous day low. Also, we break down our previous pivot level, right? This we can, I just gonna put a line here, because this is a well-established level, right? We had a high, we rejected, we just traded around it, we supported, and then basically we break that line. And once we break that particular candle, what's breaking those line, that was my exit. This over here, if we recall, this is just the previous explanation of the week. So I'm gonna remove these arrow from here, and this trade give me 4.7%. So as we have the big move from the top, almost a point, but because it took us so long to get to that level, and I had to average down twice, we barely made any profit. And okay, and this is just occurred to me right now, right? Our original entry, the first time we entered into the trade, and our exit, it's basically, it's on the same level, right? Almost to the dot at the 433.30ish level. But the contract prices, my first entry, this was the 433 puts. That was my entry. Right here, the first entry, 79 cents. So my exit price 1056 and the 63. Well, hold on. This is the correct candle. I'm sorry. It was this week where I exited. So even it was below my original entry, right? The exit, this I exited at 60, let's say 80, 20 cents, 25% difference, 25% difference of the value of the contract. Even we reached the same level as the original entry. That's why I managed to squeeze a little bit of profit out of it, because I averaged into the trade with a much lower price at that time. This entry was 48 cents and this entry was 33, right? So our average 80, 50, 30, I would say somewhere in the 55 level. Yeah, somewhere there. 53, 55 level. So yeah, and oh boy, that was a excellent exit, because we'll see what happened, right? It goes right back up, and goes right back up. My next entry, 1109, eight, 9. It's not the green candle, is the graveyard doji candle. So the thesis in these entry, basically we rejected again the previous day low, and as we went lower, right, we held, and when I entered, basically the graveyard doji was a red candle, so I entered in the red part as it was start to move down. Right away it went just for a little bit against me, but then it did continue to the direction what I was counting on. But again, the way it went down, red candle, green candle, red candle, green, red, green, green, red, red, and then we started to give up a little bit, and at that time I started to exit my position. And these over here, 48, 53, so this one, it's giving me about 10%, maybe a little bit more than 10%, which is okay. And then basically we find our support with the low, right? So the previous low on the left, we find our support, we wick back up, and then with that move we broke our trend line, right? So from this point on, we can consider we starting to make an uptrend, right? At this point we see what happens, so it's obvious, right? But once we're breaking the trend line, basically we can count on the move, and then what's happening, we reached our pre-market level. And then what happening is we reached our previous day low again. And my next entry, because we are on an uptrend, right? We're coming off of the break of the trend line. Over here we didn't break anything. We already established our trend line. This pivot high didn't reach even our trend line. We rejected. Over here we already broke our trend line, so we can consider already an uptrend. So that's why I switched to longs, switched to call entries. So basically, as we broke our level, we pulled back, and as the candle started to be green, that was my entry. It's a perfect entry. Perfect entry. We cannot even ask for any better entry. The mistake what I made, and this is when you started to get greedy. We move higher, very, very nice. 3 green candle, even the fourth one we breaking higher, and I didn't take any profit. As we started to pull down, pull back, we retested our level, and from the retest, basically the first candle make a new high. That's where, again, a graveyard doji, that's where I entered. We rejected the level, and basically I exited all my position at once. And when I exited on the red candle, and when I exited, right away we shoot higher. And this little trade, basically about 7.5%. 7.5%. One end, and that's again another interesting part, referencing how little the contracts moved. The entry here and I added again, and this we can consider a scaling in, because from the pullback I entered on a higher, added to the basically at that point winner, right, to hoping it's going higher. So in this case I entered over here 45, my entry was 47, so basically on the same price with the 20 cents higher, which is again, what can we say? And as it rejected, I exited at 40, 50, 50. So my average was 46 and exited on 50. So 4 cents, 46, about 7-8%. 7-8% winner. And then a beautiful, beautiful break to the upside. I didn't participate in it, unfortunately. And then basically we had 1, 2, right, 3, 4, and our last trade, a break of the high of the day, which usually, again, that's another thing, I'm not entering on the break of the day, because usually the today environment doesn't work out. So, but I was thinking once we able to break this level, right, and over here we also, and over here also we have a little bit of a pivot level at the 50 level, which we already about to break, right? Because this is the level, the 48. Let me put just a little line to my exit, entry, extend to the left, right? So we can see that level has a very nice confluence, right? We break down, support level, we went down, resistance, right? So it's if we break that level, we can consider to continue higher, and exactly that's what happened, and that was the thesis behind my entry. The very moment as we break, we rejected the level, but we hold it, our previous breakthrough level. So we have our support, we started to head higher, and then basically as we break a few candles over a day of the high of day, I exited, and this trade 86, it give us about another 6-7%. So 5 trades, 5 winner. One of them was just the smidge over 10%, and basically the other ones between 5 and 10%. So we were able to make our daily goal, but it's very, very difficult, very, very difficult day to trade. And these arrows over here is just showing again just the wicks. As it wick below, you were hoping or counting on the market turnover and coming back down, right? No, it's just a wick and shooting back higher. And the 435 is the big rejection level, wicked above it, and that's it, we heading down. And then from that point, basically we have a crazy downturn. To tell you the truth, a completely unexpected downturn. As we were trading prior, a straight move down with one little pullback, and in my point of view, if anybody say, oh, it's very nice that the chart opened up, it's just nonsense. This is besides that one good entry point, is just FOMO if you entered anywhere into this trade. The reason why is no pullbacks. no pullbacks. This, because you see one green candle, that's not a pullback, right? It's not. Okay, maybe this, but because of the confluence of that area to the left previously, so many support, right? Resistance, 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 went, turned to support, resistance, resistance, support, support, and then at that point, because it's so much confluence on that level, you cannot expect it's gonna happen what just happened there on that level. But anyway, that's why we traders are different. We see things differently. Me personally, this is the only point what I see as an entry, because you're hoping for a break down from the level, instead enter of the rejection, right? So you see what's the difference between the two? Over here, we're rejecting a level, we're breaking a trend line, and the continuance, right? Over here, basically is nothing to it. We're not rejecting anything, we're straight hoping for the breakdown of the support level, instead of rejecting the resistance, right? The difference, it's a big difference between the two. But again, traders are different, seeing things differently. And then basically we break the low of the day. Again, let's go to the 5 minutes. I'm sure it's just a week. Exactly, that's what it is. Just a week to makes you think the move is gonna continue, and the market turns around and then basically kills all your hopes, right? Anyway, see you guys next week. Today is Friday. See you guys Monday with a new episode. I hope you guys find value in these episodes, in these breakdowns, because I think I try to be unbiased completely, regardless how my trades turned out or worked out. I try to show you guys everything, the goods, the bads, the good entries, the mistakes, and that's how we can learn. And it's better learn out of somebody else's mistake, right, than out of your own. Either way, if you guys like the video, please hit the like and subscribe button again, and turn your notification on, and see you guys next week with a new episode.